Welcome to General Counselling, the podcast from Montresor Legal. If you're new to the podcast, to get you up to speed, we bring a leading in-house lawyer together with a law firm partner to get their insights into a particular area of the legal market. We're releasing new episodes bi-monthly and have some crackers coming up, so hit subscribe to get them as they're released. If you like what you hear, help us spread the word by giving us a like or a share on LinkedIn. Now, I've really been looking forward to today's episode. We're covering private equity, and it's not every day you get to hear the combined thoughts of a European general counsel from a top private equity investor and a Magic Circle partner. But over the next 30 minutes or so, we'll be doing just that, getting our guests' insights into the private equity market, how to make it as a private equity lawyer, and two brand new goats. It's difficult to overestimate the impact the private equity market plays on our economy, and big law in particular. So far in Europe in 2020, there have been private equity buyouts totaling $130 billion. Estimates put the amount of private capital available to private equity at $2 trillion. That's enough to run the furlough scheme for 27 years. With rock bottom interest rates bringing historically cheap financing, and UK equity values already considered low in comparison to overseas peers, taking a battering from Corona and Brexit uncertainty, 2021 is shaping up to be an interesting year. Private equity has also done more than any other industry to influence the strategy, shape, and direction of the top law firms in London. So I know we always have brilliant guests on General Counselling, but today's are really great. Two dons of private equity from market-leading firms who are right in the middle of many of the biggest headline deals. From business, we're joined by Bailhache, European General Counsel at Blackstone. The word leading is bandied around a lot, but Blackstone really are at the top of the industry, managing coming up to $600 billion across private equity, real estate, credit, and alternatives. Geoff won't know it, but he's been making our life as legal recruiters difficult for coming up to a decade, having to deal with the question from private equity associates, can you get me a job like Geoff Bailhache's? Geoff, welcome. It's great to have you.
Thanks very much.
From private practice, James Scott actually began life as a banker, working at Citi and M&A before switching into law and joining Freshfields. He's now a partner in their private equity practice, which while others may debate, I'd say is fair to describe as the leading Magic Circle private equity team. He's played a major role in a number of headline-making deals, including recently the Blackstone sale of their share in Rather Say Life. Thanks for joining us, James.
Thanks, Tom.
So to kick off, as we're embarking on lockdown 2, I suppose we should start on COVID. Geoff, what do you see as the major impacts the pandemic's had on the private equity market?
Well, I guess to give you a flavour, probably I think I've been spending my time in three sort of phases over the last few months. The first one was really damage limitation, looking at liquidity, dealing with risk matters as they related to the portfolio. There were a lot of questions around employee issues, a lot of safety at work issues, a lot of returning to work issues as the pandemic hit different parts of the economy, different parts of Europe at different times. That sort of morphed into a really opportunistic stage where we were considering a lot of pipes, we're looking at a lot of public companies, we're thinking about a lot of debt purchases, we're looking at a whole range of different sorts of transactional activity. And now it feels a lot more as though we're a bit more back to business as usual again, a few more sales processes, a lot more sort of standard looking private equity as such.
And have you found that the ability to do all of those deals with your team and your advisors working remotely, I mean, that must have been an awfully big challenge in a reasonably short time period?
Yeah, for sure. I mean, we're a business of traveling people. Folks are based in London and they travel throughout Europe to go and source and execute transactions. So to an extent, we've been working a little bit remotely for some time. Our advisors, I think, have stood up amazingly well in the circumstances, mostly their IT, but also just as a delivery of the legal product, delivery of the accounting products. The lenders have all still been just as active as they otherwise would be. So in honesty, I think is pretty remarkable and a real testament to the sort of disaster recovery processes that people had in place, that they've managed to really maintain the standards that we have over the last 6 months.
Yeah, I mean, I think one of the things that I was most surprised about especially in the early summer, was the ability of the big institutions to adapt so quickly to be able to carry on big deals, big litigation inside a 2-week period. James, from your perspective as a Magic Circle partner, what do you see as the big impacts from COVID on your world?
Well, I think the headline is that deal activity in line with wider M&A this year has obviously slowed a bit, and the statistics are clear on that. However, there have been some sectors which have remained reasonably robust. So sectors like healthcare, tech, and then certainly any adjacencies to e-commerce being areas where we've seen activity on the M&A side remaining robust. There are obviously some sectors which are more challenged and that are well written about in the press. But whilst M&A has come off a bit, as a business, we've remained remarkably busy, which is a good thing. I would say of the M&A that we have been doing, a large proportion of that has been a portfolio company driven M&A, which has remained pretty resilient. And there are some good reasons for that. But I think to your point, Tom, there is a huge amount of dry powder. If we look at our pipeline of opportunities coming to market, a lot of those have been deferred to next year. And therefore, subject to what happens with the virus, we can expect, I think, a busy year next year, if the situation relating to the virus settles.
And what assumptions are you operating under in terms of how long that may take into 2021 before people are back in the office or there's some form of normal order restored?
I think obviously we've got offices around the world, and therefore the approach that we have been taking to the virus to be viewed on a country by country basis. In London at the moment, obviously, we have just entered another 4-week period of lockdown where the majority of our people are working from home again. I think we are obviously keen within the spirit of the guidelines to enable a return to work for those who want to do so. So we'll see what happens in December. But I think there is a lot of benefit, particularly in a people business like ours, to people being together and working together. And so I think we will obviously facilitate that as much as we can within the scope of what we're allowed to do.
And Jeff, has lockdown 2 had any particular noticeable impact on you guys at Blackstone?
Yeah, we're very similar. So we've got some good experience of people coming back into the office in our Asian offices and dealing with the protocols that you need in order to make sure that everyone can be at work safely. We are entirely in the same position as James was outlining, of really feeling that we do better when we're all together. And so we'll look to do that as soon as it's something which is practical and we can be efficient and effective. And so let's see when that is after December the 2nd and see what happens in those coming weeks and months.
And do you think the delay people talk a lot about the dry powder point, and has the COVID issue, is it put pressure on firms like yours to deploy that because in 2021 because you can't sit on it for too long, or?
Not personally. I think with some firms that's certainly going to be the case where they're getting towards the end of their investment periods, and depending on where they sit in the market, it's been a very busy mid-market where they raised huge amounts of capital in a lot of the mid-market firms. And they may well find that they're running out of opportunity as such, and it's very competitive in their space. For us, we raised our last global fund about 12 months ago. We've got a long investment period to go. It's a global fund as well. So by definition, we have a lot of opportunity rather than feeling that we're fishing in a small pool. And we've just raised our sort of long-term capital fund, literally within the last months. Which again has got a long time to spend its money as well. So I think from Blackstone's perspective, we don't feel that there's a burning rush. It's probably more the opposite, where COVID really drives us towards thinking about businesses of quality and really focusing on quality rather than necessarily on price, which gives you that comfort in the underlying figures and the assumptions that you're basing your investment on, given the volatility around.
Yeah, we did a episode with a few weeks ago with a venture capital firm on there, and they were saying one of the things they were most surprised about coming into the summer was how little impact on things like pricing and particular deal, the things that purchasers were wanting to put into contracts didn't change very much, given what you thought might have happened. James, have you seen any particular changes in the types of terms that investors are asking now, given the COVID crisis?
It's a good question, Tom. It's one that we've been tracking, not as much as we expected, if I'm honest. Every week we have a discussion as to COVID-related terms, but actually it's been a fairly sort of lean discussion so far in terms of what we have seen. I think, obviously in a world of uncertainty, people are on the sell side very focused on certainty and deliverability. And obviously that presents a natural tension with buyers, but the basis upon which private equity typically contracts in M&A is on a sort of certain basis with limited conditionality other than sort of mandatory antitrust and, if relevant, financial regulatory conditions. So I haven't, Jeff should comment, but personally I haven't seen a huge influx of COVID-specific terms into transactions.
Yeah, no, I totally agree. Right at the beginning, there were a host of emails from law firms explaining how the market was changing forever, and that hasn't really panned out to be true. So from what we see, and it goes a little bit to the competitiveness of the situations, given that it's really the quality assets that are trading rather than those assets which are of a lower quality. It's a very competitive market still. The sort of recent deals that Permira were doing, for example, in Germany, I think was very competitive. And so I think that really flows through into the terms as well.
Do you think as well, like, private equity always historically had a bit of a reputation as asset stripping, and not necessarily the positive side of it, but recently, maybe driven by that competitiveness, it's now seen as more of a long-term partner and investor to some of these businesses, and as a result, the COVID issue, which even the people who are quite pessimistic see as a 2-year issue, isn't going to impact on an investment decision if you're looking at something in a 5 to 10 year window.
Yeah, look, that may well be right, and some firms like ours have a long-term capital private equity fund, for example, which obviously plays to that model. I think corporates and large family offices, so sort of family founders of businesses, are much more used to working with private equity now than they were some time ago. And look, the industry has evolved a lot. So we've seen much lower leverage in the last handful of years than we have in years gone by, albeit that the terms of the leverage are more aggressive. The actual quantum of leverage is vastly reduced. And that is undoubtedly, I think, a positive thing as people think about really investing for growth in these companies and positioning themselves to come out of this crisis.
James, you referenced, and it's well reported, that there are some market sectors that are understandably struggling with the current conditions, like aviation, some bits of hospitality, and tourism, and those sorts of things. How do you see the private equity industry supporting those industries and businesses as they come out the other side of this crisis?
Well, look, I think it's a good question. Ultimately, I think for new opportunities, distress in itself, does create opportunity for, new acquirers. So it slightly depends on the extent to which you hold a distressed business or are looking at opportunities for distressed businesses coming to market. But we haven't in our restructuring business seen the advent of the conclusions of COVID in terms of the sort of COVID related restructuring work. There have been some examples, but we expect next year to be the sort of period when we start to see more restructuring opportunities coming through the pipeline. And with that, for private equity, there will be, some opportunities. Obviously, as you've said, Tom, private equity is a growing asset class. There is this sort of structural shift of public money moving into private capital. And so with that, will come opportunity. I think to echo Jeff's point, as a firm, we spent, March, April, May, spending a lot of time with private equity, looking at, their portfolios, looking at liquidity regimes, looking at, all the different types of furlough and government loan schemes available, with a view to ensuring that portfolio companies were on the strongest footing possible. So I would say that work has all happened now. So next year it will really be a case of seeing, when do we start to come out of the pandemic? What does the recovery look like? For one particular aviation situation that I'm involved with, there's huge amounts of debate as to what the recovery curve actually looks like. And, the reality is no one really knows. So, hopefully we should have more clarity on what the recovery curve does look like next year. And that, I hope, will in turn sort of, get the wheels moving again in terms of a busier M&A pipeline.
And Jeff, if you were looking at predictions for 2021 for private equity, what are the things that we won't hold you to them, but best guesses is what you see happening next year?
Well, look, it's been an interesting time. Look, the fundraising environment has remained pretty buoyant, frankly, especially for some of the larger firms. Access to capital remains as it has been. There are some regulatory headwinds around which we're all dealing with, large or small private equity firms, from foreign direct investment restrictions, and making sure that we still have access to the opportunities that we all sort of think we should have access to. I think we're going to find that you see quite a few proprietary deals across the next 12 months. I think you'll see a lot of auctions being run in a pretty competitive way, as they have been before. As soon as there's even a modest level of business travel, which is happening again, then I think you'll start seeing huge influx. And to your point, there's a lot of capital which is available to be spent. And I think you'll start seeing a lot of people taking more comfort in the numbers which are in front of them, and having more visibility as to what the next 6 to 12 months looks like, and therefore being ready to push the button and go ahead. So I think it's going to be pretty busy. And
that is probably music to the ears of a lot of law firm partners who may have had a quieter deal in the M&A pipeline in 2020. Private equity is such an important market for the law firms in London. That if you look at almost all of the top city US and UK law firms, private equity is the lead practice for a good chunk of them. Jeff, you must be absolutely spoiled for choice when it comes to selecting advisors on the deals that you're on. What are the things that you look for when you're deciding to appoint an external firm on a particular transactional piece of work?
Yes, we're very lucky. We get to work with some of the best lawyers all around the world on the things that we're doing. The focus for our firm really is having more than one law firm who knows you, and more than one law firm who you know and really understand where they're strongest, and the places that you think you'll fit best together. We really focus a lot on making sure that we've got a sort of central deal partner, a central relationship partner who can really deliver their firm, who's able to think about the things that matter to us, in advance rather than on prompting. That allows us to leverage the size of our own teams as much as anything. But also it results in much better risk-adjusted advice. And so we really think about the people who can bring issues together and find solutions for those. We also think a lot about execution. It's one of those things that everyone always says is just taken for granted that everyone can execute. But from my experience, it's a very important part of the legal services industry. And it's a differentiator in many cases, and especially as we have increasing regulatory, as I mentioned, the foreign direct investment rules and other more invasive approaches taken by other regulators. It's becoming even more important that you have somebody who's very sensitive to the regulatory issues in front of them and is really able to navigate those in a way which puts you in a position to win. And so we really look for that quality in the advisors who we work with. So
there's a depth of bench, not just in the sort of immediate deal teams, but the support practices and in particular.
Exactly. I mean, I don't think deals are quite as simple as they were, and that we certainly have not done many secondary buyouts in the last 3 or 4 years. I think we're across our global fund in the 80% or north in primary deals or take privates or some kind of carve outs. And so the days of people sort of receiving a contract, not making many comments and not doing much diligence and moving on don't really apply so much. It's much more the case where we get very specialist advice in a whole range of different sectors and geographies, and it's obviously essential that you can really trust that and rely on that.
And James, from the law firm side, I mean, Freshfields have been well known to how well they've built their private equity practice. How do you guys approach servicing big key client private equity relationships?
I think to Jeff's point, you need to have a consistent team, and the client, ultimately, typically wants a limited number of people or one person to deliver the firm for them. Obviously, behind any relationship partner then sits, a much broader team. But having consistency of people acting on the account, both at partner and associate level, is really important. And we actually encourage everyone in our business, including our EAs, to develop relationships with their counterparts, at private equity firms, because, from our perspective, the more vertically integrated the relationship you have, the stronger the relationship is. So I think that's one aspect. I think having a clear understanding of your client's business and how you can help is essential. And sort of aligned to that is really being proactive and having a very open dialogue, with the client as to what their short-term priorities are and how you can then think about, helping in terms of delivering the firm to assist with those. Obviously, most PE clients are structured along sector lines. And so I think, the law firms that think thoughtfully around how they offer their sector expertise and advice, so that is again aligned with the way in which the private equity house itself is structured, is always a good thing to focus on. So I think those are the various elements, but being proactive and on the front foot with private equity clients is key.
We heard a lot from people actually, especially when things got bad, that the best thing that a lot of law firms can do is just ring up and say, how can I help, rather than have a particular pitch, or just being visible and being close to their counterparts was something that a lot of people thought was a really important part of that relationship management element.
I think that's right. And look, it's recognised that obviously every large private equity house has more than one law firm that advises it, and that naturally should be the case. But I think there's every benefit in being proactive and communicative, and speaking to clients. And not all opportunities will go to any one particular firm, but it's important that you have that engagement.
Yeah. So the other side we look at a lot is associates who may decide they don't want to do the partner thing and they want to move into private equity. And it's been a difficult one because there's not, if you think about it, how many lawyers Blackstone have, Geoff, but it's probably not very many.
Not many.
If you were looking to give advice to someone coming on secondment who has designs on getting into an in-house position in private equity at some point in their career, what advice would you give them to put them in a good position to do that?
Really depends on the level of your secondment when you're coming over. People who are coming at a junior level, I think, should use it as a real sponging experience. Get to know as many people in your peer group as you can. Those relationships will last if you put enough effort into them. So they should try, and it's a pretty unique opportunity to work day to day with people rather than meet them in an art gallery at a law firm sponsored event. People tend to be more receptive in the day to day than they do on their best behavior somewhere else. So that is something which is very important and a good opportunity to take advantage of. But you really take advantage of that, not just by sort of showing up and being a nice person, but by taking the time to understand what our business does, how it's structured, how the lawyers actually help the investments get done, how we really impact our business in a positive way. And that doesn't need to be, showing people a pitch book of your skills and expertise every 10 seconds. But I think it comes across quite a lot in how you generally interact, how you show that you understand the things which are being done in front of you, and you give some of your experience, because what I think most people don't really appreciate is when they come to a private equity house and they are a one-year PQE lawyer, they probably have done more deals than the people at their level in the private equity house by quite a few. If they're working with James and doing 7, 8, 10 deals a year, the average person in the private equity firm is probably doing 1 or 2 in the same sort of time period because of the different role they're playing on those deals. And so that sort of experience of execution, that experience of being there in the nitty-gritty part of getting deals done, a lot of people actually don't really have, and they're desperate to learn it, and they want to meet people who show drive, and that they think, boy, at some point you're going to be the person who's the partner at this law firm who I'm working with, and I want to have that relationship with you. So that's very important indeed, I think.
Yeah, I think that, especially if you're a junior lawyer and maybe your role in the particular deal isn't, leading it or headline, is still paying attention to what's important in the deal further up. So if you're then on secondment and someone asks you about it, you've got something interesting to say based on your experience from it.
Yeah, exactly. It's really important. And then the people who come on secondment at more senior levels just do that, but at a more senior level. So they're obviously trying to get a much better feel for a lot of the things James was mentioning earlier around strategy, around how we think about investing opportunities. And that leads through to being sensitive to the issues that we're worried about as you think about advising us, whether it's something very specific and legal, or whether, frankly, it's something not particularly legal at all, which says, I think that you guys should be thinking about what the reputation impact of X, Y, or Z is, or what the PR will look like around X, Y, or Z. So having that broader visibility of issues and that broader appreciation of things which your clients actually worry about rather than just a specific legal topic, I think is a hugely valued skill, and it's something which then will pay dividends as you're coming to pitch for work and you're continuing your career.
And that's something, James, you probably have to be quite proactive when you're at a law firm and you're, as you say, working on 7, 8 deals a year and putting some pretty punchy hours in to develop into your locker of skills outside just deal execution.
Yeah, I mean, it's all about, ensuring that, we are training, our lawyers to think as sort of commercial business advisors with everything that means. So to Jeff's point about being commercially thoughtful about, things, slightly beyond, just the legal points. But in terms of, I've always said that, a law firm has 2 markets, the internal market and then the external market being clients. And so effectively, we spend a lot of time with people internally, aligning them to different client groups, talking to them about how we think about, having that positive engagement with clients around sort of business development opportunities, whether that be, sending clients sort of pipelines of assets that, we are tracking that we know, coming to market, or whether it be sharing the latest, regulatory updates. It's important to have regular contact points and to show clients that, one is 150% engaged in their business and in their success.
I think that's it's finding out what your clients care about. I mean, whatever industry you're in, that's good advice for people. And it's not immediately always obvious in the day job, because you're presented with a bit of work or a deal you have to do, and you don't always know what your clients' pain points are, or what's keeping them up at night. And communicating with them and finding that out is a great skill. James, when you're advising senior associates or maybe partners a bit below you about how to develop their private equity clients, are there any other things you think are particularly useful, other bits of useful advice that it would be worth?
I mean, I think the big thing for me is, having a successful private equity legal team is all about team sport. So you may have, a senior relationship partner or two actually responsible for managing the account and delivering, the firm to the client. But fundamentally, it's very much a team sport. And, the success of the firm with any particular private equity relationship is heavily dependent upon, the team delivering the very best people within that firm in a very thoughtful and strategic way to the client. And so I think, as lawyers sort of develop within private equity teams, within private practice, sort of understanding and thinking about how you join the dots up between, for example, taking Blackstone as an example, how the team that services Blackstone in Asia is interfacing internally with the team that services Blackstone, in Europe, being thoughtful as to how you put structure around, your team, who's on it, what regular internal engagement you have, what that means in terms of your external engagement, ensuring that you're coordinated, that you're sharing internally, relevant know-how, so that, we are as seamless as we can be when it comes to execution. All of that, requires a lot of time, thought, and effort, behind closed doors to ensure that, one can be as successful as possible.
But it's super important, because I've definitely seen a number of firms over time where they have got brilliant private equity partners, brilliant private equity relationships, but for whatever reason, the sponsor isn't sure about their financing guys or their high yield people or whoever it is, and that can have like a major impact on their ability to then originate deal flow from that institution. I
agree with that, and look, Jeff should comment as somebody who instructs firms all the time. But for me, the team sport thing is really relevant, and like with any team, you're only as strong as your weakest link, and therefore, there is in the market for talent, you have to ensure that on your relationships with private equity houses, you have the very best people within the firm working on them.
Yeah, no, totally agree. One of the things that really comes across are people who have perseverance, in that there are a lot of very highly qualified and top quality lawyers out there who try once and then give up and try again somewhere else. And they haven't realized James's earlier point, which is that actually lots of opportunity depends a bit on conflicts. It depends a bit on a whole range of different factors, which may come your side of the fence next time. And so having that determination to succeed is very important, and putting that into the right framework is very important. So it's not just a case of, I've read in the Financial Times that you might be interested in buying this asset, which is the least useful thing that we receive, through to, I thought that you guys like investing in, high growth industry sectors. And so I did some work in, some tech thing, which I thought was interesting. And I wanted to share it with you on a generic basis. These are the kinds of issues we've seen. We think this is great. That sort of thing that anybody can do at any level within the law firm, and present internally their views and show that they're thoughtful, show that they think about what their clients actually do and what they need. I'd have thought James will find that hugely helpful in his associate base, and we then find that hugely helpful from our law firm.
Yeah, agreed.
But both of you guys are from the private practice and in-house route have carved careers that would be the envy of most junior lawyers, depending on which route they wanted to go. Jeff, starting with you, what's the best bit of careers advice you've had, and who gave it to you?
I always think it was when I was a while the best careers advice came, which is from Marco and Mike, a sort of mixture between the two of them. They had a huge focus on associates really having a feel of accountability for what you were doing, both on a specific basis that you were part of the client group. To James's point, this was a very vertically integrated team. And so you felt directly responsible for the quality of the work you were producing. It didn't feel that I was doing something that Marco would read and therefore he would fix. And so it didn't really matter if I did my job or not. It felt that it made a huge difference as to the quality of the work that I was doing, both internally and externally as we were client facing. And that really flows through into your career as well. So they were very focused on people really feeling that your career was your responsibility. It's not the firm's responsibility to deliver you at some point into the greatness of partnership. Instead, it was up to you to decide how best to use your skills, use your time as much as you could in order to put yourself in the right position. And they obviously would help you with that as a sort of mentor as you were going.
Same question to you, James. If you're thinking about any particular bit of advice you've had over the years, what was the best?
I think the biggest piece of advice I was given was when I was thinking of moving from banking into law. I went to speak to John Hopkins, who was the head of law at Downing College at Cambridge, who I knew and who sadly no longer with us. But I asked John for his advice as to how I should think about, applying to law firms. And, John recommended that, I apply to Freshfields. And that was because at the time he thought Freshfields had a sort of a team ethos and culture that he thought, would suit me. And look, in hindsight, it was extremely helpful advice. And I owe a lot to John Hopkins for, spending the time with me to talk me through that thought process. So I think that would be the bit of advice that still very much sticks with me.
So before we break, we ask everyone who is a guest on the General Counselling podcast to nominate their GOAT lawyer. Most people who are familiar with the podcast will know what that stands for now, but anyone who isn't familiar with the sporting acronym, GOAT stands for greatest of all time. So our version of GOAT, it can be anyone alive or dead, real or fictional, highly personal, very well known. We've had a real variety of nominations. Jeff, who would you go for?
I've been looking forward to this. One of the funny things of my job is, as I mentioned earlier, that I get to work with a whole bunch of lawyers of many different disciplines and in different geographies who are at the top of their game. And I coined a phrase within work of having lawyer crushes a while ago, and I had a few of them over the years. So I'm going to save those people their embarrassment. My dad's a lawyer, so I'm going to go with him as my greatest of all time. Otherwise, he'll watch this, and then I'll be sent to my bedroom like the old days.
Is he on LinkedIn? Because we'll be able to add him to the GOAT list, and he'll probably.
Oh, well, he will be if he can be added to such a prestigious list, I'm sure.
And James, from your perspective,
after much deliberation,
it's me.
Exactly. It's Jeff. Jeff, you leave me no choice. It's Jeff. Now, after much deliberation and without naming some of the very excellent lawyers we work with at clients or within my firm or other firms, I actually settled on Rumpole of the Bailey, a character who had a known love of acting for the underdog, and I very much enjoyed reading John Mortimer's, fabled fictions on Rumpole. So I think Rumpole of the Bailey is fine.
He hasn't. He's the first time we've had him, but I was expecting him to crop up before too long. So I'm delighted that he has done. Well, gents, look, thank you both so much. That was a great episode. Really, really interesting insight into what's going on within the private equity world at the moment, and some brilliant advice to anyone practicing as a lawyer in the area. So look, all that's left for me is to say thank you both so much for giving up your time to share those insights. I hope we'll have you back again as guests in a future episode. And thanks everyone for listening. We will see you on the next episode of the General Counselling Podcast, which will be released in a couple of weeks' time. Thanks very much, guys.
Thank you.
Thanks, Tom. Thanks, Jeff.